stocks were lower across the board today after U.S. tariffs on about $110 billion worth of Chinese imports went into effect. And joining us now is Tom Stringfellow, President and Chief Investment Officer at Frost Investment Advisors, has about $4.7 billion in terms of assets under management. So it's September, which is pretty crazy, but we got through the summer, and we have been talking about how September can maybe not be the best month for markets. Are you a buyer right now?
Better a buyer today than probably last week. I mean, a true statement. And you know, you look at August, typically a bad month. September, typically even worse. You know, it's just amazing. You know, coming into New York and watching everything, you know, red and a few things green. It's almost like being in Christmas in New York City at times, only not near as much fun.
And hotter.
And much hotter.
So why, when you say more this week than last week, what is it, and I guess what sectors in particular have you interested?
Well, yeah, the dynamics are changing almost daily, and it's courtesy of whatever the latest tweet is, as we were talking about, or as I've heard talked about many times before. We don't know what's going to be said, which just adds to the angst of the investors in general, the marketplace in general. And, you know, over the weekend, we're hearing, you know, there's troubles in Britain. Apparently, Brexit is still working, you know, 3 years after the fact. You know, that's unrest in the market. Apparently, you know, we're still trying to get a trade deal in China, but, you know, no one's really talking to one another other than, you know, it's kind of like a circular firing squad. And, you know, that just adds to a lot of investor unrest. You know, the one area that I was really kind of interested in was the one, you know, area that's green, the stock that's green, is Amazon. You know, you look at how that is transforming, and that's not a new topic here. You know, we've been talking about it for a few years now, but, you know, just in my own house, the number of boxes I get from Amazon every day is absolutely staggering. You know, it says there is a transformation in what's happening in the retail sector.
You know, and Tom, you note this dichotomy that we've talked about a number of times, which is everything seems to be getting a little bit worse on balance throughout the world and the U.S. economy as well. But, you know, stocks like McDonald's and Procter & Gamble, Coke, these things go up every day. A lot of them are at record highs.
Yeah.
How do you think that kind of resolves itself? Because so much pressure now, increasing amounts of pressure are being put on the U.S. consumer to keep our economy growing.
Well, absolutely, and you know, we see consumption's up in the last you know, report, record numbers. We see that wages are growing up, not at the same level. We see job demand increasing. The latest surveys are all positive on consumers, so you know, that gives me a lot of confidence that the retail stocks, select retail industries, are still in the top of the mindset of investors, because that's where consumers are migrating. And the fact that these companies, which I wouldn't call the boring safe harbor staples, but rather consumer interest stories, really speak well to what's going to be happening in the markets as we go forward. You know, once we get out of the doldrums, assuming we get out of these doldrums in one piece, I think this is going to be, you know, continue to be some of the top areas for investors. You know, you add some of the select technologies where you've got, you know, moats, where you know, we'll pick you know, some of the efficiency operating software that's coming through in technology. All of these are positive areas where I think where investors can look at. They're speaking to increasing efficiencies in the market. They're speaking to improving earnings growth for investors. These are solid companies with sustainability.
Just talking about the staples, though, there's an argument to be made that they're pretty expensive right now.
Yeah.
So if you're an average investor and you want to jump into the market, it seems that a lot of them are really looking for yields, right? They're yield hunting. The bond proxies are really outperforming.
Correct.
So you mentioned Amazon. Are there other areas, I guess, or specific stocks, if you could mention them, that, you know, you're bullish on right now?
Well, and you know, given the dynamics of just today, and not having looked at, you know, what survived and what hadn't, other than Amazon is glaring green, I would say it's hard to pinpoint a particular stock today. But what I could say is, you know, those consumers that are really nervous about the market, you know, the catch-all is good sustainable yield and yield growth. You know, I really like companies that fit the growth metrics but have a better than market yield and have had a history of raising dividends over, you know, a consistent period of time. And those provide, I think, a good safety area for investors who are looking for some way to earn rent on their money that they have in the investment markets. Where I wouldn't be looking is 30-year fixed income. I don't really understand that unless there's some reason for investors to really create. That's the new risky investment, I would say today. I like fixed income, but I like the shorter term maturities. That still provides that buffer against volatility. But if I'm going to get aggressive, I would just as soon buy an aggressive growth stock than I would a 30-year treasury in a market environment like this.
Tom Stringfellow, President and Chief Investment Officer at Frost Investment Advisors. Thanks so much.
Always a pleasure.
Get back to San Antonio safely. Thanks for visiting. You can come at Christmas and see more.
Yeah, we'll have more lights up here.
More red and green.
It won't smell quite as much.
It'll be okay.
That's good.